I'm so glad you're here. This is going to be an important video where we're going to be taking a step back, look at Bitcoin 4-year cycle theory and analysis, look at current technical analysis, and together put it together to find out where Bitcoin possibly and potentially is going next. But more importantly, instead of trying to guess, knowing where to position yourself from a risk management basis. If you're new here, welcome. And if you're not, welcome back. This is Jordan with Conquer Trading and Investing. I want to start off here today and show you what past 4-year cycle behavior has looked at. They have a lot of things in common. There's a lot of similarities. There's a lot different. And to be honest, this time could be very different. Having seen already price now come off its lows, and you could see price up 100% off its lows, and we could look back at past 4-year cycle behavior, and we see that we have, by the time we've reached the halving event in the past 2 cycles, we've been able to see price retrace all the way to the 0.786 fib retracement level. If that were to happen again, if we were to see price by the next halving, approximately April 2024, reach the 0.786 retracement fib, that would mean that price is going to be tagging somewhere around $50,000. Now, that's not a given. Just because it happened in the past doesn't mean that it's going to happen again. Obviously, this time could be different. And if it's different, that means that we'll have a technical breakdown. We'll take a look at that in just a moment. I want to go ahead and focus in and zoom in on this one area that we're currently in. And you can see this downward sloping channel. It's very clear. If I go ahead and show you the candles, you could see that there's a few times that we've wicked below the bottom support area of this channel on a closing basis. You could see that it's held on an intraday basis. It's gone ahead and it's pierced it through. You could see if I move this channel up and down, you could see, for example, here you find support, this area resistance. You can find, again, this area showing resistance. And this symmetry will continue throughout. Again, you could see it here in this area, price finding resistance and support and resistance. And it's very clear, which is why we have at this particular point up here, this one-touch parallel trend line. Now, I could say, and you could say, that it's very clear, even though that we have that outer resistance to get through before we see a breakout of this downward sloping channel. By the way, that would be quite bullish. My expectations, if we were able to break out, would be very, very positive. At the same time, if I zoom out, it's very clear to see that, okay, we've been holding this area over here, this area of what is of support. And if that were to break at any point in time, we potentially could see a lot lower price action than maybe a lot of people are prepared for. So even though we've seen the lows hold so far and we've seen a nice, beautiful move off the lows, that lows are coming into resistance. You could see over here right now how this important resistance right over here. And just remember how we drew that parallel trend line, because on our last chart, on our last slide, you're going to see why most people might be looking at the market right now. And most people might draw a trend line and they might do it like this. Something like, I'm just going to try to do this as accurate as like, there you go, a trend line like this, and say once that price breaks, that you're in the clear. You've had a trend line break to the upside. And why that's true, that's a trend line break to the upside. I think it's more important to see where the market is actually showing that symmetry. We got to not only break above this area, we got to then clear above it in order to have the next leg up. That next leg up, we'll look at potential price targets in a moment as well. I want to move over and I want to show you what it looks like. Oh, let me do this with you. All right, I'm going to draw in this trend line. This trend line is coming off the December high and it connects to the April high. We're going to draw then a parallel line, a clone line, and we're going to put it off the bottom over here, the December 2018 low. And you can see that's where price was able to go ahead and establish the trend line. We wicked below it during the global lockdowns, and we'll go ahead and we'll make sure to include price action in case price were to go ahead and trade below that again. So again, it's a parallel trend line and we're extending it out further this way. You'll see why we are looking at a low deviation that far below. in just a moment. Now, if all goes well and we're able to hold the bull market breakout, if you go back onto the YouTube channel, I don't know whether it's on the live or it's on the regular videos, but you will see in December where we called price below 17,000 the bull market breakout prediction. And having called that bull market breakout prediction and the bull market has broken out, we have to be responsible and we have to look for where that's invalidated. At all times, we want to make sure that we have our surroundings about us, because indeed this time could be different. By the way, if you're still here, thanks for being here. If you have a chance and the opportunity and you could hit the thumbs up. If you're new here, subscribe to the channel. Make sure you hit the bell icon. And most importantly, if any of this sparks any type of thought or insight that you would like to share, do include it in the comments below. I'm always looking at the comments and responding to any thoughtful conversation that's taking place. You could see that we're looking for where we might see some type of breakdown of the bull market. And then we're also watching for pullbacks. If you remember 2 days before the top, we said one of these is likely wrong. You could go to the videos, live videos, and you'll see the chat that says one of these is likely long. Last time it was Bitcoin. I want to go ahead and continue, and I want to add in this trend line now. This trend line is coming off the June top. This was, by the way, last cycle, price bottomed. If you remember this area, this was the bear market low, and this is where the Fed stopped their rate hiking cycle. This was the last rate hike of last cycle, and during that type of atmosphere, you could see that risk did extraordinarily well. This time's a little different. The Fed may have had their last hike in May. They may have another hike ahead of them in this coming month, July. But what happened over here is that we've seen a lesser degree of rate hikes. They've gone from 75 basis point hikes to 50 basis point hikes to 25 basis point hikes. And you could see that thus far risk is behaving quite appropriate. And it is potentially possible, if they do move towards pausing rate hikes, that we could see similar behavior where price then does make a nice move up. And maybe then we even tag that 0.786 retracement fib that we've seen in previous cycles. And it's all potentially possible. We just can't take it for a given. So let me continue forward over here and add in this trend line over here. And you can see it connecting the June high, 2019 high, until the April 2021 high. And then we'll go ahead and clone that trend line. It's another parallel trend line. When I say parallel trend line, all you're doing is taking a trend line and you're going ahead, and you can see that I'm connecting those 2 points, and then I'm bringing it down, and you can see that the slope is exactly parallel. And I'm taking this clone trend line, and you can see that comes off of what was the COVID low. And then this area over here, this is in May 2022. I'm going to go ahead and add another one. I'm going to add one more, and I'm going to add it off the bottom, our current bottom. And you could see that once again, that clone trend line that put in where we had the US banking crisis, we see a nice touch of that area. It held. Not only that, over here, off the recent events, we've seen over the last week, price once again test and touch that trend line, and it once again were to hold. If that trend line were to fail, if that trend line were to break, at that point in time, I would be very cautious that potentially the bull market breakout is in jeopardy of failing. And we'll look at in a moment where that ultimate trend line break would be for a failure of the bull market breakout. That would be a cause for concern. We touched it last week, coming off of some news, off of first the SEC's lawsuit against Binance, followed by Coinbase. And then it seemed to bottom on the announcement that BlackRock is looking to get approval of a Bitcoin fund. Let's continue over here and add in a few more lines. And you could see this one trend line starting over here, connecting it down where we found support again. We find support again over here. And then when we came above it, you could see that price was able to hold it as support, that resistance and support again. And we're currently trading below it, right? Which is, more of a neutral than positive event. It's positive that we've held above this trend line touch we just discussed, but we are coming into resistance. And we have, if I clone this trend line, you could see again, the market paying attention to that as resistance. So if we have any resumption out of this current correction that we're in, right? Having together worked through where the bull market breakout was occurring, having been able then at this point in time to look for a correction. That correction's been going on now for over 2 months, and price came down 20%. We're looking to see if we break down further or if we get a resumption out. On a resumption out, you could see that we have this resistance coming into play. That resistance, if it were to break out in the next week or so, is coming in somewhere around $30,000. Above $30,000, it looks like the next leg up is taking place. Now, if we look at that from one more angle over here and the outer trend line, remember this outer trend line was shown off of the daily price action. And then I'm going back to closing basis because it's easier to see. You can see that trend line is also coming in the same place. The outer trend line we need to clear to get a breakout of this descending channel, right? A breakout above is entirely bullish. Some people might look at this and say, well, the trend is down and the trend is your friend and don't trade against the trend. Well, we have seen 100% move to the upside off of the low. We're into resistance. We're cautious into that resistance. We've seen a pullback since, but we're looking now for either a further breakdown or a resumption out of here. A resumption coming in, I see $30,000 above us as resistance that we need to work through. I'm going to go ahead and just add a few more lines over here. This is where we were looking at, hoping for much higher expectations off of the summer 2021 low. We were looking for, I think we got lucky, new all-time highs by October 2021. And we did see that. We saw wave 1 into wave 2. We were looking for then now a much bigger move up, well over $100,000. But we had a technical breakdown occur below 53,000. It was the first. And then we saw another technical breakdown, this one below 35,000. And then we saw, again, another technical breakdown. We looked at this trend line together just a few moments ago. That was below $27,000. And now we have to continue looking below us. And right now, that would be if we broke this trend line, that would be a technical breakdown. Where may it potentially lead us is what we're looking for and what we want to know. If I go ahead and take from that bull market breakout that we looked for December into January of this past year and this current year, you could see connecting these two lines. Remember we did that over here? If I come back and I look at the 2018 bottom, and we have this parallel trend line, and you can see it connecting. Yes, we did wick below it during the global lockdowns. Over again, we have this area over here and the trend line, and why if we broke down this current trend line, if we had a technical breakdown, I would say that potentially that is signaling the bull market breakout has been invalidated. I would wait to see a break below this trend line below. This would be a place where you could look to, obviously, if you're a swing trader, capture and look for a significant move or get yourself into a position if we're going to see even a deeper correction. Breaking below this trend line, that could set up what is a move that could come down and test our greater parallel channel down over here, or even below it, the deviation below I like to refer to as the COVID low over there. And all that is potentially possible. We could look at that from one more way. I'm lining this current in white over here. The current price action, the current cycle off of the 2021 high over here. And what I'm doing is looking at what happened if we see any type of similar price action. I have the chart we just looked at overlaid, so you're familiar with the overlay that I have over here. And you could see that currently that we have been able to hold that area. Now, I would say people that lean towards a very bullish posture, what they're hoping is that from here, we go ahead and we shoot up. I want to point out that would be different just as far as past cycle behavior. Now, past cycle behaviors in the past, I lean towards that likely this time is different and not just in a similar way in going to be something that is very glaring. Now, we don't know that for sure, and maybe this time winds up being a lot more similar still, and we could say that up until now it's been similar. I mean, it has been significantly different that thus far off of the low, we've been able to move up 100%, whereas off of the low, by this time we had moved up 300 or 400%. And then if I go back over here, and I could say this time we moved up quite significantly as well, but maybe we're getting ready. Maybe as soon as they move towards a pause, we see that that price action occur. And by the way, if I zoom out a little bit and you could see this purple line above and the other two lines we have over here, we could say that price coming into the halving each time has been able to touch that area both times. So is it potentially possible that we're looking at least at 42,000 or sloping down? I mean, potentially, but this time's already a little different. You could see that volatility, you could say so far is diminished to the downside. It's also diminishing to the upside right now. So that's something that's notably different. And if we look and we were to say in the past what has occurred at this particular point in cycle, I can make the observation, well, from here, from where we are today, that price has gone ahead and it's basically for the next, let's call it 5 months or so, has moved sideways, right? And that's over here isn't that neat? This is the COVID meltdown over here. And notice how it comes down into that lower trend line over here. That's that deviation that we just put in. And we said it's this one over here, this trend line over here. So if we have a breakdown on what would be, maybe we see more bank failures. Maybe the Fed raises rates in July, and then by September or October, we see some further banking problems in the U.S. And remember the last time we had one, the price action got a little frothy to the downside, and that could happen again, So we just want to be aware of that, and it's kind of neat. And the best case scenario would be the line that we pointed out, that as long as that holds, the bull market is well in check. And you could see that in the cycle before that continued to hug that line. It's very neat the way that I see that and look at that. If I line them up as if we looked at, a lot of people think that actually the true high was in April 2021, the structural high. It wasn't in November. And if I line the cycles up like that, I could just make the simple observation, well, for the next 5 months, in whether it was the last cycle or the cycle before that, price went sideways to drifting down from where we are over here. Again, you could see that lower COVID line in play. Now, in this area, we did dive below it, but again, that is where we have our deviation off of the COVID low. If we were to break below that, if we broke below this area, then at that point, I don't expect that we come down and test this area. This would mean that if we're testing this trend line, that the markets are under pressure and distress. That could happen. So what's likely is, most bullish case scenario is that we don't break below this trend line, right, for some time until we are able to, touch, let's just say the most bullish outcome that I would personally have would be once again seeing a retracement before the halving to the 0.786 level, which is $50,000. It did happen 2 cycles ago. It did happen last cycle, and it's possible it could happen again. That would be the most bullish thing that I could see occurring in the markets. That's not the only thing though, right? So let me jump back over here, and I'm going to look it off of this, and I'm going to say, as long as that line holds. Now, if that line falls and breaks, well, as long as this line holds, and we just looked at it from 2 different perspectives, that's good. These 2 perspectives, that's very good. That means that everything is fine and healthy. And that likely any type of hold of that trend line would be a very strong buying opportunity. Maybe some people were not as early coming off of the bull market breakout, and a lot of people likely frightened over here. And, I think people are feeling better over here. We'll find out, but I think this offers a really good opportunity if you have the patience to wait for that. If it occurs and ahead of time you have that awareness, as long as you can manage your risk off of it, because if it fails, that at that point we could be under significant pressure. And I don't think that price would take out this trend line under distress. And if things did get really bad, and it did, then we have the COVID deviation under it. If that were to break, then everything is entirely different. I can't imagine a scenario right now where that would occur. Those are beyond my expectations. If I jump in and I look at a chart right now, this is a linear chart. All the charts we have been looking at have been log. We could look, taking that overview that we just put into place, look at current price action, and we could say that and see that price right now, since this correction that we're in is coming down within this tight channel. And during this tight channel over here, we could see that right now, Price has been able to hold, right? This was an important level, this 25,200. We broke below it. We were able to hold our trend line over here, the one that we've been looking at. This is off of the bull market breakout, the U.S. banking crisis low. Thus far, that has held. If that were to break down, I would think that this lower channel support would be the first area of a potential bounce, right? And you can see that's well above our bull market breakout trend line. And right now we're into resistance. So usually not a good idea to buy into resistance, usually for a discretionary trader. We have mechanical systems that do it all the time. Now, a breakout above this resistance, we looked at this from a different perspective. I'm going to say that a breakout above is somewhere just above 27,000, right? And we have looked at $30,000 from multiple angles in the beginning as being resistance we need to reclaim. You could see that actually price making a new yearly high. That then opens the door likely for what would be the next leg up. If we're able to break out above this current, and what I did over here was I just cloned that trend line off the one touch. You could probably see why now after the work we've done today. If we're able to clear above this and get a good old-fashioned breakout to the upside, we had a nice this correction. This correction actually started here middle of March, right? And it's been just a tight range correction. It's been about $3,000 the whole way in width. It's a very tight correction. If we get a breakout at that point in time, we could then begin looking at what upside targets are for this next leg up together. Thanks for being here. I hope you enjoyed this video. If you did, do go ahead, hit the like button, leave a comment below. And once again, have a beautiful day, everyone.